There has been a lot of mixed reactions, and the automakers in Europe are actually requesting the EU to review these tariffs because the customer will actually end up paying the price, right? Because that means that these entry-level vehicles that were cheap and could be the purchase for the mainstream customer, they won't be available anymore.
Speculative, strategic, and shocking. Just last month, the US decided to hit Chinese electric vehicles with a staggering 100% tariff. Now, the European Union has slapped Nio with a sturdy 21% duty on electric vehicle imports in addition to the existing 10%. This news came right after Nio announced a little over $1 billion in first quarter revenue, missing Wall Street expectations by about $70 million. Despite this, their per share loss was still less than anticipated. Moreover, years ago, 5.1-meter-long SUVs were a rare sight for Nio, but now buyers have more choices. This EL8 is coming here by year's end, promising to outshine its rivals in every way. Can Nio's new product live up to the hype, and will the company manage to overcome the tariff barriers? As of June 21, 2024, onvo analysts predict that Nio's stock is a hold stock, and it could rise to $6.14. Indicating a potential gain of about 43.46% from their target price. This shows how much the stock could increase according to their outlook. Despite only one buy rating at the moment, onvo collects views from multiple analysts to provide a broader perspective on Nio's future. Keep in mind that analyst ratings are just part of the picture. It's crucial to conduct your own research, considering Nio's financial health, industry trends, and overall market conditions. So, can Nio really hit the $6.14 target set by analysts? What do you think? Share your insights and comment below. If you like this update, hit the like button and subscribe for more investing insights.
22-inch. Look at these two doors. They're huge. Connection. Look at this. They have added a new feature to open it, to close it. To open the door for the rear fridge. Yeah, so we have leather housed vents. That's quality. Range Rover Cullinan kind of size. This is huge.
At 5.1 meters long and 2.2 meters wide, the Nio EL8 is nearly the same size as a Mercedes EQS SUV or BMW XM. With a 3.07-meter wheelbase, it offers 3 rows of seats inside. You can get it fully loaded with heating, ventilation, and massage functions, and it comes standard with automatic climate control in 5 zones and a glass sunroof. The EL8 also comes standard with LiDAR sensors to help detect the surroundings. These sensors are a step towards highly automated Level 3 driving, but for now, the EL8 sticks with active lane departure warnings and adaptive cruise control. The LiDAR helps make the matrix lights even more precise. Nio's battery swap feature is here too. In minutes, you can swap an empty battery for a full one at their extensive network of stations. But if you have the large battery version, watch out. You might get an older one that only charges at 125 kilowatts instead of the current version's 240 kilowatts capacity. Assuming the charging station provides 660 amps at 400 volts. The base model of the Nio EL8 costs 82,900 euros, but this price doesn't include the battery. You can either buy or rent a battery. The smaller battery costs 169 euros per month or a one-time payment of 12,000 euros. Moreover, the 100 kilowatt-hour battery costs 289 euros per month or 21,000 euros if bought outright.
The European Commission announced last week it would impose anti-subsidy duties on up to 38.1% on imported Chinese EVs from July. That followed a move by the US to hike tariffs on Chinese cars in May. The report said China's auto industry called on the government to adopt firm countermeasures at a closed-door meeting on Tuesday. Sources said the meeting was organised by China's Ministry of Commerce in Beijing and attended by SAIC and BYD.
Nio, one of China's leading electric vehicle makers, saw its shares dip slightly today. As reported by the New York Times, the European Union announced tariffs of up to 38% on Chinese electric vehicle imports. This comes after President Joe Biden quadrupled U.S. tariffs on Chinese electric vehicles to 100%. Over the last 5 days, Nio stock dropped 7% as shareholders processed these geopolitical tensions. According to the New York Times, these tariffs are another front in escalating trade tensions with China, raising concerns about a flood of cheap Chinese green tech in global markets. European and American electric vehicle makers face a big challenge in which Chinese companies focus solely on electrification and have lower costs. But it's not all bad news for Nio. Unlike US car makers, many European automakers are heavily invested in China, and their China-made cars will also face these higher tariffs. Even some European brands like Mercedes-Benz have criticized the European Union's move. On paper, the European Union's decision seems reasonable. In line with this, The Guardian reports that the tariffs are intended to counter the alleged state support given to China's car industry. This support supposedly allows Chinese manufacturers to sell vehicles at lower prices than global competitors. The tariffs follow a 9-month investigation into claims of unfair subsidies to Chinese battery electric vehicles. The rates vary by brand. Until then, Chinese companies can present evidence to challenge the European Union's findings, which could lead to adjustments in the tariffs. Despite this, Nio stock hasn't dropped, likely due to the complex situation. Europe wants to protect its electric vehicle industry but fears retaliation. Chinese Foreign Ministry spokesperson Lin Jian cautioned that the tariffs would damage China-EU economic cooperation. He also expressed concerns that they could disrupt global supply chains. With European car makers also concerned, this development adds a significant challenge to an already tough market for electric vehicles. Moving forward, let's analyze Nio stock more. The revenue breakdown shows that the vehicle sales segment is dominant, accounting for a whopping 88.56% of the pie. As the electric vehicle market continues to gain traction, strong performance in this segment is crucial for Nio's sustained growth. On the other hand, others, a less noticeable category, make up the remaining 11.44% of Nio's revenue. The parts, accessories, and after-sales vehicle services subcategory represents revenue generated from Nio's spare parts, car accessories, and maintenance services. A strong after-sales service network not only fosters customer satisfaction but also creates a recurring revenue stream for the company. Consequently, the provision of a power solution subcategory hints at Nio's potential involvement in battery swapping stations or other solutions related to electric vehicle charging infrastructure. A strong presence in this area could be a strategic move, as convenient charging solutions are a major concern for electric vehicle adopters. The presented information pertains to just one fiscal year. Analyzing revenue breakdowns over multiple years can show whether Nio is effectively diversifying its revenue sources or whether its reliance on vehicle sales is growing or shrinking. Revenue is just one side of the coin. Investors should delve deeper into Nio's profit margins to assess how efficiently the company is converting revenue into actual profit. Moving on to the operating data of Nio, the graph presented showcases the number of vehicles Nio delivered each month. We observe a significant variation in deliveries, with December 2023 boasting the highest figure of 22,600 units. This number dips considerably in January, with 15,070 units, and in February, with 7,530 units, highlighting a potential production or supply chain issue. Despite the fluctuations, the year-over-year growth rate paints a somewhat optimistic picture. December, January, and February all exhibit positive growth rates compared to the same months in 2023. December leads with a staggering 260.47% growth, followed by January with 153.71% and February with 46.96%. When analyzing the bigger picture, the limitations of the data become apparent. The time frame depicted in the image is narrow, making it difficult to discern long-term trends or seasonal patterns in Nio's deliveries. To gain a more comprehensive understanding of Nio's delivery health, investors should look beyond the data presented. Nio's launch of the EL8 E-SUV comes amid challenging tariffs, showcasing their commitment to Europe despite significant trade barriers. Despite the European Union's duty on Chinese electric vehicle imports, Nio remains determined. It highlights the EL8's potential in the competitive SUV market with features like advanced LiDAR sensors and battery swap capabilities. However, uncertainties persist. Nio's stock faces volatility due to geopolitical tensions and regulatory challenges. Analysts foresee potential gains, yet cautious optimism prevails amidst fluctuating market conditions. Looking forward, can Nio effectively navigate these tariffs to achieve growth in Europe? How will global geopolitics continue to impact Chinese electric vehicle makers? Share your insights in the comments below. If you enjoyed this video, you might also like our hand-picked, action-packed newsletter about Nio. Subscribe now at wiseinvesting.com. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about Nio stock, just click this video here. Thank you for tuning in, and stay tuned for more exciting content in the future.